You're watching the newsroom right here on ET Now. I'm Ajaya Sharma. The markets are trading flat today, but we have Radhika Gupta of Edelweiss Mutual Fund to talk about markets and flows. Radhika, thanks very much to join us on the show today. We are chatting after a long time. I must say that the way SIPs have come back to record lows, do you think that the cyclical nature of SIP flow itself, people come back to markets when they're doing well, they go away when they are not. Do you see that change in the next couple of years?
I do. Hi, Ajay. Always good to talk to you. I think the SIP book has become more stable now than it is. I am not saying that it is completely stable. You will have 5 to 10% variation in that number. But I think structurally SIPs are trending upward. If you look at 2017, SIP book was only 4,000 crores, and 6 years later we're talking about a 15,000 crore book. I think if we were to have this conversation in 5 years, between compounding and increasing flows, you'll have a 30,000 crore book, which is an SIP book for the industry. And I think that is a very, very powerful force. SIPs are now a structural way for people to save, and investors have realized if they stay invested for even 3 to 5 years, SIP returns never deliver you a bad experience. So I think the structural volatility is going down, and we should look at a 30,000 crore SIP book in 5 years.
Interesting. Doubling of the SIP book to 30,000 crore in 5 years. We were also looking at the data. Radhika, you also run a very successful mid-cap centric fund as well. Flows to mid-cap and small-cap are also increasing. How are you analyzing, the market's tilt or investors tilt toward that pocket in terms of risk reward? How does it look?
So I think one is market and second is investor appetite. I think from a market point of view, after the, I would say, correction or cooling off over the last 18 months, and the fact that you have seen an earnings rebound, the last two earnings cycle have been very good. I think you are seeing opportunities in the mid and small cap space from a market's point of view. So as a house, we remain very constructive on mid and small cap as an opportunity. I think from a mutual fund investor point of view, investors realize that this is really where the heart of stock picking and alpha creation is happening. So small cap funds, many of them are delivering 5-6% alpha on a year basis. Mid cap, actually, I think Ajay is now even a misunderstood word for mid cap, because India is a market, I tell global investors, where mid cap is actually by rank. So it's 100 to 250 companies, and it's a very diversified index. In fact, mid cap comprises most market leaders. So if you want to take a play on many interesting themes, whether it's unorganized to organized, China plus one, benefits of discretionary consumption, you almost have to go to the mid cap index. So anyway, I think our large caps are now mega caps, and that is the story around mid caps. And small cap is really where I think alpha creation is happening, and I think that's what investors are realizing.
Small and micro up till now was considered a completely no-go, and only a pros and big HNIs used to go there. You think that the real India story actually exists there? And also talk to us about a word on valuation in small to micro. Is there froth? Do you see fair value? What is the analysis?
I would carve out a distinction between small and micro. I think micro is a space that has been the domain of PMS and individual investors. And I'm not sure if it is the domain of mutual funds just yet. You can have individual thematic ideas, but finally we are liquid vehicles with daily redemption pressures. So I don't see mutual funds easily venturing into the micro cap space, because you're really talking about companies with sub to 3,000 crore market cap in the micro cap space. So I think that's a little bit of a time away, Ajay.
What are your thoughts on the overall market in terms of the elements the market is made up of and gives visibility on? Earnings quality, macro stability, participation, and global cues. What does your study tell right now when you talk to your team?
So I think our theme for the year, Ajay, was recession before rebound. And in some way that is exactly what's playing out. You had tough conditions going into this year, and now you're starting to see a rebound. Now, if I look at some of the factors that you've talked about, globally, I think one of the better cues has been a little bit of a pause from the Fed in terms of rates. And in India, I think there's a general consensus that rates have sort of peaked out. It's also one of the reasons that Nasdaq and global tech companies are finally seeing some kind of rebound. So I think macro stability continues to get a little bit better. And in India, I think inflation has pulled off very nicely. Earnings have been a pleasant surprise, I think, with the exception of a couple of misses in IT. Financial sector of yours actually looks in extremely comfortable space, at a time when actually the world is grappling with so many issues in banking. Your whole theme around Make in India, beneficiaries of PLI, capital goods heavily plays, the whole manufacturing space, I think earnings continue to deliver, and the market is rewarding that. And I think that's what you've seen in the last couple of weeks. The third impetus this year, which I think could give you some, legs, is also FII flows. So, the last 2 years, really domestic flows have supported the markets. But I think with what you're seeing with interest rates, you will see some, hopefully, global investor interest come back to India. And that some of the, I mean, when we talk to global investors overseas, we do see enthusiasm for India, and especially India relative to China.
All right, Radhika, thanks so much for joining us. FIs have alluded to our markets for a long time now. Few months, around 45,000 crore has come back. Time for a very short break on the show. On the other side, from